of it, he put up this little chart. And what he did is he talks about this idea of the 200-day moving average versus where the price is currently at and coming up with a multiple between these two, and then looking at a historical reference to kind of have an idea of where the multiple could run moving into the future. So I really like this idea. I think that it helps a person understand whether you're at the high end of the price multiple or at the low end of the price multiple. But when I looked at Trace's chart, I saw that he didn't have a lot of data points. Like he was pulling random spots here in time, like in January 2011, you had a multiple as low as 1.67. Then by June, you had a multiple at 12. So it was kind of, to me, it seemed like it was randomly selected. I don't know what Trace's thought process was. It seemed like he was trying to capture some of the high numbers and then some of the low numbers. Like here's 0.87, which is pretty low. But what I wanted to do is I wanted to go back and take the data for every single number that was out there since inception of Bitcoin. So when I did that, oh, sorry, wrong chart or wrong page here. When I did that, I came up with this page right here. And this is the data for those numbers. And if you guys want to see this page real time and play around with this, just below the video, you can see there's a link to it. And I bought the domain mayermultiple.com, and then it just takes you to my site. It's a redirect to my site. So if you're trying to remember that, just type in mayermultiple.com anytime you guys are wanting to see what the number is currently at, and it'll take you straight to this page, and you can look up what the current data is. So the way to think through this first chart, and there's a little bit of a write-up here, so you can kind of go through this and see what I'm saying here and how this tool can be used. But the thing that I think is important for people to think about when they're thinking of the multiple, I think of it kind of like a PE ratio, even though that's probably a terrible representation of what this is, but it's going to help you kind of understand when things are getting very highly priced or they're a low price. So when you look at this chart here, the first thing that I want to point out is the 200-day moving average. You can see that today, on the 29th of November, the 200-day moving average is close to $4,100 for Bitcoin. The average Mayer multiple over every single day that I have data for, which goes back to August 2012, that has a multiple of 1.44. That's the average. So if we were going to look at the average, you just take 1.44 times this 200-day moving average, and that would be the average price that you'll see Bitcoin trade at. I'm going to show you, before I go into this chart here where my mouse is at, let me scroll down and show you this probability distribution plot that I got. So when I took all of those multiples over the history of Bitcoin's price, always looking at the 200-day moving average, obviously the first 200 days, there was no data until I had 200 days worth of information. And then I took the data points, the multiples from that point on. And when I plotted them into a distribution plot, this is what I got. And so that 1.44x is right here. That's the average that you're getting. And you can see it's not perfectly normal data. It gets way skewed out here to the right as far as how high the multiple would go. So when you're thinking about this, think about it from animal spirits standpoint. This is how far the animal spirits will go on the buy side, clear up to 8 times the 200-day moving average. Now, granted, that only happened, and I can show you exactly how many times it happened. When we go back up to this chart, this histogram is being built by the data in this chart above here. So you can see that we got to a multiple above an 8 only one time in the history of Bitcoin. So, you know, if you're seeing some of these numbers here, look at how few times we've actually gotten to some of these multiples. Very few times. So this leads to my next point. So once I started looking at these multiples, I started asking myself, okay, well, when should I be a buyer and when should I be a seller, if at all, and all that kind of stuff. And so what I ended up doing is I started looking at other stats, and I'll talk through these, but the one I really want to talk about is this one right here. So what I did is I built a matrix of data, and I don't have it pulled up here. It's in an Excel document on another computer, but this is what's going to be posted here permanently so you guys can see how I arrived at this analysis. But what I assumed was that a person had $100 of free cash flow every single day to buy Bitcoin. And the question then became, what multiple should I buy and what multiple should I hold? And what I found when I did this is that as I adjusted the multiple, this would be a multiple of, 1.4, clear up to a multiple of 2, up to a multiple, and this is where the line is at a 2.4. When the multiple got to a 3 or higher, you actually started getting worse results as you push out to 8, because at this point you're buying when the market is way overpriced and it only stayed there for a day. So you're basically buying at the top. So when you look at this, you're getting the best return by buying anything under a 2.4 using that logic. Now, whenever I said my free cash flow was $100 every single day, and I would buy every single day unless the multiple was higher than a 2.4. Whenever the multiple went above a 2.4, all I started doing was holding fiat currency at that point. If I held fiat until the multiple dropped back below a 2.4, I would take that balance that was adding up of the fiat and I would conduct a buy on that very first day that it dropped back below 2.4. Okay, so that's how the math worked out, and this is the result that it gave me. And so you're not really getting much, and just so everyone understands the axes, so you obviously know that the x-axis here is the multiple itself. The y-axis is the number of Bitcoins that were actually accumulated at the very end. Let's say I started the first, this was in August of 2012 was when the data started. That's whenever the buying started with $100 of fiat every single day, $100 USD fiat every single day. And then how many Bitcoins would you have today? And this is, I've completed this analysis on the 29th of November, 2017. So how many Bitcoins would a person have if they were only buying below a 2.4x? And the number came out to be 2,020 Bitcoins. That's what this number represents here. And so you can see you don't get any better results. In fact, you actually get worse results if you buy at a multiple above a 2.4. You get a little bit better results here, but I didn't feel like the risk, and this was mostly oriented towards a first-time buyer. So let's say you own no Bitcoin, but you're interested in taking a position. It might be a small position, might be a big position, whatever. That's up to you. But if you're taking a very first-time position and you're buying at one of these multiples, call it a 3.0, the probability that you're going to see a pullback is fairly strong. It's almost, based on the historical data, let me show you how strong it is. So looking at this chart, this is your multiple now over on the left hand on the y-axis, okay? So anytime the multiple went, and I'm recommending the 2.4 based on the previous chart that I just showed you, and that 2.4 is showing up right here. So what you're not buying is when the multiple hits these extremes. You're not buying here, and you're avoiding that, and you're getting your highest return just from a buy and hold standpoint. I'm not accounting for any selling because whenever I think about this, my opinion is that this is going very high in the long run. When you think out 3 to 5 years from now, this is going to go extremely high in my personal opinion. So I'm not interested in selling at all, and I'm not interested in paying a large capital gains tax, and just kind of avoiding all of that. So my goal is just to buy and hold, and so that all the models that I'm showing you are based around that idea. Just so you guys know, I can't see the comments. So if you guys got comments, just kind of hold them to the end when I'm done. Then I'm going to pull up the screen so I can kind of see what the comments are that are coming in. So when you look at this, this is a really important idea. When this pushes above a 2.5 to a 3, it only stays up there. At least it did during this period back early on. And I think that's an important highlight. Early on, when it got to such extreme valuations over the 200-day moving average, it only stayed there for a few days. Like each one of these dots is a day. So you can see when it hit here, these are just staying up here for a few days. This is like probably a month or less that it was up at that valuation. And then look at how it came back down. After going to such a high valuation, it came back down to almost the exact 200-day moving average after that. Then when it happened again here at the end of 2013, you see it went up and it came back down. So I'm not telling people to time it because I don't think you can use historical data to time anything. But I think that seeing results from the past kind of help you conceptually understand things and to emotionally control yourself. Because if you see one of these big giant jumps, you should expect it to come back down to a multiple of 1. That should not surprise you. So when that happens, A person should be able to control their emotions. They should be able to say, yeah, that's pretty normal. That's what I expected to happen. And it's a lot easier to stay with the position when that happens. Now, I think it's important for first-time buyers. If you're buying up in this range, like this 2.5 range, and it's very new to you, you're probably going to have some temperament control issues early on, because you're going to see the position potentially move lower than what your principal is, and that is when it is really, really hard. Let's say you got into this back in 2015, and today it's way higher than it was. You know, whenever I was looking at it in 2015, it was like $220, and that's whenever I got in. It's very easy for me to sit through a 50% downturn, because a 50% downturn right now is 5,000. And if you bought it at 220, it's really easy to sit through that. For a person who buys at 10,000 and it goes to 5,000, that is extremely difficult. It might scare you away forever. So I would tell a person that's a first-time buyer that if you're buying at a high multiple, you just got to be prepared to have your temperament tested, and that is really important. This chart here that I'm showing you is the exact same chart, only this is for 1 year of data. So if you were looking over in this area right here, all this is down here is a zoom in of this area. Okay, so you can see what's been normal for the past year is that we really haven't gone lower than a multiple of 1.2, which is higher than what we've seen back here. I think what's important of why you might have seen this multiple get pushed lower than a 1.0 is this was after Mt. Gox. And this is when a lot of people were scared away. There was a narrative running around that, you know, Bitcoin isn't safe. And it was really the exchange that had the failure, not Bitcoin itself, not the protocol itself. So I think that's a really important highlight, and for people to understand that. And I think that maybe you might be seeing the multiple trade at a higher level, and this might become the new normal, as long as you don't have something, a scary narrative that comes into the news, like another exchange failure or something like that. That might push it back down below a 1.0. So this stuff, in my personal opinion, is really important for people to think about, because it gives them some context and some understanding of where prices can go. Going back to the histogram, you can kind of see where we're at today. It's at a 2.4, I think 2.45 or something like that right now. So you're out here in the histogram. This is normal based off the historical data. This is where we're at now. And so yesterday I made a post on Twitter. I said, hey, if you're buying right now, if you're a first-time buyer right now, be prepared to have your temperament tested. And you know, we saw a lot of that today when the price went up to 11,000. Then it had a really hard sell-off of about 1,000. And you know, I saw some tweets from people that were leveraged and all sorts of craziness. I don't recommend any of that kind of stuff, but they were leveraged in their, you know, they're posting, oh my God, I just lost $30,000. So know where you're at in time and space. Know what the probabilities are of some of this stuff. So let's go back up to this chart, and let me just show you how I look through some of the information here. So here's all the multiples over on the side. Here's the count. This is the day count. How many days since the inception of Bitcoin that we've seen these multiples, really from August 2012 that we've seen these multiples, because that's where my data went to. So when you look and you say there's 490 days that it was between a 1 and a 1.25, there was, you know, 353 days between that multiple. This is the cumulative count, which goes to corresponds with the cumulative percentage. The percentage that I like to look at is this percentage here, because then if I look at this and we look at the multiple that we're at right now, we're at, you know, a 2.45. We're right in here. So if you take this 2.413% and you add up all the percentages below it, that's the percentage that you will see the multiple trading higher than it is right now. So if we just ballpark this is 3.4, 4.4-ish, probably 5.5 to 6%. Okay. So it's trading, if you have 100 days of tracking Bitcoin's price, you're going to see it trade higher than the multiple we've got today, about 5 or 6 days out of 100 days. That's how you can think through that. The green on the chart over here, this is a mess up. You'll see that be removed in future updates. This right here is telling you how many standard deviations some of these moves are. So you can see the 3 standard deviation move. You got 8, 9, 10, 11 days that it has been in since I've been tracking the data back in 2012 that you would actually be at a multiple that high. So if it's green, that's probably a good spot to be buying. If it's higher than the green, then you probably want to lay out and just hold off. And that's because you don't want to test your temperament. The returns aren't really all that much worse if you buy even clear at the top. And the reason why is because it just stays out there for just a day or two. It's not very long. And we're assuming that you're only investing a consistent cash flow of $100 per day with the model that I ran to get this. So that's why I'm saying anything under a 2.5 is where you need to be looking. Now, I was very surprised by this result whenever I did this. The reason I was surprised is because when I initially made this chart, I was looking at it just kind of ballparking, and I said to myself, you know, if it's within one standard deviation on the upside, or it's anything on the lower than the normal or the mean, I would be a buyer. And so my green lines originally only took me out to here. And then after I ran the statistical test and also the simulation, I was very surprised that it was recommending a higher multiple to still be a buyer. And the reason why that happened, and you go and you play with the data and you look at it, the reason that it was recommending a higher one based off this chart down here is because Bitcoin is growing at such a rapid, the price is appreciating at such a rapid pace relative to fiat currencies, that you have to pay a higher multiple because it's moving so fast. So I was really surprised by that, and I would have never guessed it would have been such a high multiple until I actually did the simulation. So with all that said, I'm now going to pull up my screen here. Let me stop sharing the screen. I'll go back to my video. Okay, I hope you guys can see me now. Okay, so I'm curious what the questions are. So if you guys got questions, please drop them into the chat right now. I'll try to answer a few here and just then wrap things up. So I'll just kind of thumb through here and see what I got. Yeah, I mean, Brandon, so I see your question about the 4,000. So that's the 200-day moving average is 4,000. But based on the numbers that I ran, you might be waiting for a very long time to get a price of $4,000. It might come tomorrow, it might come the next day, but that price is fairly rare. In fact, we haven't seen the price at a 200-day moving average for over a year. So let's say that you're waiting for, because listen, tomorrow the 200-day moving average is going to be higher because the price right now is $10,000. So that 200-day moving average is going to keep going up. So if you keep waiting for that, you might wait a year, you might wait 2 years. Heck, you might not ever see a price that's at the 200-day moving average. I don't know that. So I would be very cautious waiting for such a low multiple. At the same time, if you buy in at a 2.4, you got to be ready to see half of your investment. If this is your first time getting in, you better be ready to see half of your principal disappear, or maybe even more. It could be, I mean, some of the numbers on the multiples there go down to like 0.5 of the 200-day moving average way back in the earlier days. So you got to be prepared for that. And it's something that I think that, you know, if I was going to give somebody some advice on this, if you're going in, man, it might be best for you just to stick your head in the sand for about 6 months and not look at anything. And then you'll probably be in the green at that point, and it might be a little easier for you. But I don't know what to tell you. You got to make your own investment decisions here. But I'm hoping that some of this information is going to help you think through that and just be a little bit more informed. All right. There's a bunch here popping in. Brian saying, why'd you get so interested? So I did a live chat on Monday night. Look for it in my feed. I did it with Pierre Richard, and I talk about why I've gotten interested in this. I've been in this since, you know, I haven't really talked about it on the podcast. We did a book called The Age of Cryptocurrency back in 2015. And if anyone listens to that podcast, at the very end of it, you can hear me say that I took a position in Bitcoin back in 2015. And I've just held, and I'll tell you, it's been quite the ride, to say the least, because this thing's been going crazy. Tell Buddha I said hi. Okay, I will tell Mike. I think Mike's probably watching. Let's see here. Great place to buy. Yeah, I wouldn't say that. Let's say next, get proper sizing is myself this year. Yeah, great, Brandon. Great to hear you got 400%. That's awesome. Um, guys, if we can keep the questions just to what I'm talking about here, because I'm taking this video, I'm going to embed it into that Mayer multiple page. So other people that weren't here tonight are going to be able to watch that whenever they arrive at the page and they can understand the stuff. So if you could keep your questions specifically for that, that'd be awesome. So you can find a Koshi, T Koshi. I see you're asking, where can I find the 200-day moving average? If you look right below the video, there is a link to www.mayermultiple.com. I will try to keep that updated on a daily basis. I might, miss a few days or whatever, but you'll have a very good idea of where that multiple is, where the 200-day moving average is by clicking on that. So just go to mayermultiple.com and then you'll find it. Okay. Really, that's all I got. So you buy signal is 2.4x multiple of the 200-day. Is that accurate? Yes, Richard, that is accurate. If you're investing, and I think it needs to be caveated with this, if you're investing with a consistent amount on a consistent basis, then I would tell you anything under a 2.4x is probably, reasonable. But if you're doing like a big lump sum, let's say you have $50,000 and you want to go into Bitcoin, you're probably not going to want to do all 50,000 at 2.4x. You're probably going to want to slow drip that so you kind of get a lower price, because 2.4x is very high from a statistical standpoint. Compared to dollar cost. So Jason, I like this question. How does this multiple strategy compare to dollar cost averaging? I would tell you this is dollar cost averaging with a slight tweak. Okay. So your dollar cost averaging, whatever that fixed amount is, once a month, once a week, whatever you want to set up, I would tell you to do it more often than less often. And maybe a smaller amount, but more often would probably be a better approach than just doing it once a month. The reason why is because you're going to get basically what the market movement is. The only exception is whenever the price goes over a 2.4x, I would tell you to turn it off. And you'll probably only have it turned off for a very short amount of time, because historically the price has only gone above a 2.4x for a very limited period of time. If you leave it on through that upturn beyond 2.4x, the returns really aren't that much better. This chart is probably helping people that are first-time buyers more than anything else. And I think that's a really, really, really important point. If you're buying for the first time, that I would tell you to not do it above a 2.4, and I might even tell you to go below that until you start getting ahead in the position, and then you can just kind of put on your dollar cost averaging. That's what I would recommend. And then, maybe turn it off after it gets above a 2.4, because you'll get a slightly better return based on back testing, which isn't foolproof as to what's going to happen to the future, folks. So this is only as good as what you want it to be. Is that spreadsheet live? Yes. Just click on the link below and you guys can see it. Larry, you can do the data yourself. Sure. Just do a search for historical BTC price and then pop it into an Excel spreadsheet. And then you're going to have to do some statistical histograms and things like that. All right. I think that, let me see, one more. Wouldn't this be different than historical norms due to the fact that we're not? That's a really good question. So here's the question. Wouldn't this be different than historical norms due to the fact that now the adoption is really catching on and a need is there? Look at the local Bitcoin volumes. You're exactly right. That might be 100% valid concern. Just because we got historical charts that show us this data does not mean that it's going to be representative of what's going to happen in the future. So very valid concern. It might be terrible information to not buy above 2.4x. But based on the stats that I'm looking at in the past, that's what it's recommending, or it's not recommending anything. That's what it's displaying as what has happened in the past. So you can just take it for that. It might help you. This is my intent of outlining all this, is really to help people emotionally as they're going through this, to kind of understand, hey, 2.4 is kind of high. So if it crashes tomorrow, I shouldn't be surprised. That's normal. At least historically, that's normal. So that's really kind of the point of why I have this up here. So Jason, you're exactly right. So basically each day you're going to cost average and just check the multiple. If it's 2.4 or lower, then buy. Exactly. You're exactly right. So I think you guys are getting it. I hope I've explained it somewhat well. But I'm going to continue to update this. I think it's a tool for helping you manage your emotions, because this is going to be an emotional roller coaster all over the place. Oh, there was one more thing that I wanted to show you guys real fast, and I wanted to talk this. Let me share my screen one more time. Sorry, I didn't bring this up earlier. Okay, share my screen and go back to the page. If you scroll clear to the bottom, I didn't show this chart. This is a really, really important chart as far as I'm concerned, and this is about network effects. So Tuur Demeester, if you don't follow him on Twitter, you need to follow him. He's an absolute authority in this space. Tuur was giving a presentation back in 2014, and he put this chart up there. And if you look at, this is the Metcalfe law, logarithmic regression for a network effect. So like think iPhone adoptions. When you think about how to project where that's going to go, you use Metcalfe's law. Right now, in Metcalfe's laws, specifically for networks, trying to understand how big the network's going to grow, what this could look like. So when you think about Bitcoin or any other cryptocurrency, it's a network effect. So the more people that join the Bitcoin network, the more powerful it becomes, the more difficult it is to kind of overthrow that through some other protocol. So when we're thinking about the value of the protocol, it's really about how many users are connected onto the network. So when we look at the price back when Tuur was giving this presentation back in 2014, and I want to get an updated chart of this. If anybody watching this has an updated chart of this, please send it to me on Twitter or something so I can get it uploaded into this web page. So when you look at where this was at, the price was around $500, we'll call it, on this chart back in 2014. When you warp to where we're at today, at the end of 2017, the projection back then was that we'd be at $10,000. And when you look at where this is at, it's exactly on $10,000 today. So this should not come as a surprise. It's actually projecting about 11,000 by Christmas, and it's probably about 10,000 right where we're at right now. So when we look at this chart, it has been very accurate. Now, if we looked at where it was at from 2014 up until now, it kind of went like this, and now it's coming up. And when you look at the surges in the past, they've really kind of shot through the line when they've come up. So I'm not saying that's what's going to happen, but I guess I wouldn't be surprised if that's what happens going into 2008, is that we kind of have a little bit of an overshoot of this, and you might get up to 20 or 30K. And then it's projected by the end of 2018, in a year from now, we should be at about 30K on the price of Bitcoin if things continue to trend in this direction. This has it looks like this would go out to about 1 million, but probably wouldn't get there till about 2026 or 2027. And this might be a little low, this might be a little high. It's yet to be determined. As we get a little bit higher fidelity, as we get closer to 2024, we'll have a better idea if it's shooting a little high or low. But this is what I'm using to really kind of understand the big picture as you're going through this. If this sounds like a bunch of bunk, I would tell you, do some research on Metcalfe's law. Do some research on network effects, because that's what's happening. You've got to understand network effects. Fiat currencies are devaluing at a rapid pace when you compare them relative to Bitcoin or any other of the top 3 to 5 protocols that are trying to become the next currency. They're devaluing at such a rapid pace that it looks like Germany back in 1921 when they went through hyperinflation. I don't know how this is going to continue to progress. My personal opinion is it's going to continue to progress based off of this chart. I could be dead wrong. I could be 100% wrong. And I think for people that are allocating cash flow to this, they need to be very conservative, especially because if you feel like you're coming to this late, I can assure you, you're not coming to this late. You're coming very early if you're looking at this stuff. And so you don't really need a very large amount of money pulled from your free cash flow to invest in this to have a huge impact in 5 years from now. I mean, just look at this. If you bought it at 10K, within 3 years, that should be about within about 3.5 years, that should be about 10 times higher than what it is now. So you put $1,000 in, you should have $10,000 kind of thing within 3 years. Those are huge numbers. These are crazy numbers. And I expect this to be a feeding frenzy as we move forward. But I could be dead wrong. I think everyone needs to be very careful and don't put anything into this that you can't afford losing all of it. That's what I would tell you. So I hope that that helps. Let me stop sharing my screen here because I'm sure that looks very confusing. Okay, and I'm back there. Let me pull up the chat window. And all right, wow, we have 120 people with us. This is awesome. Okay, I couldn't see any of the questions that you guys had there. Yeah, I see the bunch of them coming through there. Going to be an issue. So what about XRP? Yeah, I'm not going to really address anything else because this video is going to be built into that Mayer multiple page. So guys, I really enjoyed this. Thanks for joining me. This was awesome. And please follow me on Twitter. Follow Trace Mayer on Twitter. He's the guy that's responsible for some of this information that I'm putting out there and really kind of gave me the idea to build out this Mayer multiple. And please use, hoorah. Hey, please use Mayer multiple when you talk about this, because I really want to brand that around Trace. I think that he's done so much for the community, and I think it'd be really a lot of fun to brand this multiple after him, because he's the one who gave me the idea to kind of build this out. Really appreciate it, guys, and we'll see you guys next time.